What's up, everybody? Chris Dover here. I am the head systematic trader at Macro Ops, and we are doing our weekly market overview, starting out with the S&P 500. But first, I want you to hit that like button. It costs you nothing, and it makes my life amazing. Why wouldn't you do it? Also, subscribe to the channel if you like this. We do this every week at the beginning of the weekend so that you can take the market knowledge that we learned from the previous week and apply it to the upcoming week. This is what we're going to be focusing on at MacroOps for the upcoming week. That's what we're talking about, not what just happened last week. That's somewhat relevant, but you need to know what to do next week. That's what we're doing. So subscribe. Let's go. This is the S&P 500, the most important thing in the market, whether you want it to be or not. Everybody kind of agrees it is. Okay, so 2 weeks ago I did a video, the weekend video, where I was showing you the S&P 500. This is a weekly chart, and the 10-week simple moving average of the New York Stock Exchange advancing issues. Okay, this is an average of that, just so you're aware. So if you're running around looking, saying yours doesn't look like mine, that might be why. I just hide that part. And every time we get down into this area, a couple of things happen. We get into crash mode. This is representative of crash mode down in here. But it also signals a major bottom in the market. So whenever we get that, whenever we're down in here, we got a pucker factor going on. We got to be careful because it is not it's not a warm fuzzy down there. You look at it now and you're like, oh yeah, I definitely would have bought every one of these bottoms, especially this one, and oh yeah, that one, and all, like, of course you would have. It doesn't feel good at the time. It doesn't feel like the thing to do, but it works. Now, you have to use risk management. You can't just go all willy-nilly and say, oh, I'm just going to do it from, every time it touches there, or every time it gets down, I'm just going to buy. You have to use good risk management. So whether that's position sizing, whether that's using stops, whether that's using just buying calls so that your premium is all you're going to give up, whatever it is, use risk management around this. This is not ego. This is not I got to show off how good of a trader I am. This is just conditions are excellent for the market to have bottomed. Now, you can also see that when it's happened before, this was the October 2022 bottom in the bear market. It took a while, not until May or so of 2023, so like well over 6 months before it really started to get moving, and then didn't even get to new all-time highs in the market for another. So it was about a year and a half that it took after that major bottom to start putting in new all-time highs. So it's not exactly the like, oh, we hit it and we rip it from there. It's not easy, and that's just where we are. So I wanted to start everything with, we are watching a potential bottom forming. This is very nice bottom activity, the hammer last week, and then staying within here, an inside candle this week. Everybody who rushed to buy this, whatever we had last week, doesn't feel too good about themselves right now. There's a lot of people getting stopped out on the long side. There's a lot of people getting stopped out on the short side. That's what you want. You want everybody off the bus or the train, because when the train leaves the station, if everybody's on the train, there's nobody left to buy. If everybody's off, then there's plenty of people to buy, which is the thing that moves it higher. So that's the first thing we're looking at. Let's go through our sectors. Russell is in bear quiet. We have S&P in neutral, mid caps in bear quiet, NASDAQ in neutral. Look at the bottoming formation on the NASDAQ. I have a long entry, a curvy long trade forming up to get long on NASDAQ into, I'll be pulled into the trade next week if unless something amazing happens in the next 45 minutes or so. I'll be pulled long into the trade. It is a mean reversion, systematic trade only. It's not a, this is not me calling the absolute bottom and YOLOing the world on this. Just systematically trading it. It's in the mean reversion market regime. It's in the neutral market regime. And so I trade it with my neutral curvy trading strategy. Curvy is the mean reversion strategy we use to catch all these. Okay. Now, why not mid caps? Why not Russell? Look how much stronger Russell is. Well, Russell's in a bear quiet regime. So until proven otherwise, it doesn't get the same treatment that something in the neutral market regime would. You would be looking for further trend lower on that. Into bonds. Bonds, we got long bonds. The 10-year earlier caught most of this move, got out. There was a little bit of excitement this week, but so far no follow through there. Just trail stopped out on gold. We had a swing beast buy on gold. Trail stopped out this morning, I believe. Maybe it was last night. And then I got a new buy signal. On gold. And so I will be waiting for gold to pull me into this. It's the swing beast system. This is my swing beast system. I'll put a link to both the curvy system and the swing beast system in the show or in the notes down below if you're interested in trading these systems with me. This is what we trade. So buy signal kicks off. We had one earlier. We just exited, trail stopped out, and now it's on again. You can see this is the results of the system for however long back it went. It's TradingView. It's not the best tool. We are currently long copper. Got long copper over here, and we're trail stopping on this trade right now. Okay. We got short. So this was a curvy long on copper. This is a swing beast long on copper. This is a curvy short on silver. We got short up here on Wednesday, and it broke in our direction, and we got real close to hitting our profit target. It came back just a little bit. But again, we're in the neutral market regime, so that's why we would have shorted. Take a look at the difference. Everybody's all up on metals going crazy. Well, you have you have the bull quiet market regime, the green, which says trend trading. That's what trend. So I don't short a bull quiet. I only go long. Silver, on the other hand, even though everybody's talking about silver and werewolf riots and whatever is going to happen, it's in the neutral market regime. It's not in a position to trend the way gold is. And so that's why I shorted it, and it worked out so far. We moved our stop to lock in some profits. We locked in 1R on our profit. Our profit target is 2R. We almost got there this morning. We'll see what the weekend brings us. Didn't do anything platinum, light crude, natty gas, or Brent. I went RBOB. I went gas, and we got long, and we're looking for a move up into the 228 area or so on this chart. Like we're long June contract. So again, neutral market regime, we trade curvy. We trade our mean reversion strategy. Okay. Currencies. Now we're starting to set up into a place where the shorts are starting to work out. A nice one on the British pound forming, a nice one on euro forming, Swissy, maybe on the peso. So we've got euro, cable, Swissy, peso, all potential shorts versus the dollar. So you either go long the dollar or you choose your shorts or distribute them across there. So I'll be looking at currencies this week. As far as commodities go, the softs and the ags, I'm not really doing anything in there. Not really doing anything with those right now. Soybean oil futures is setting up. So we might get one next week. Otherwise, I have, we've just been sidelined watching cattle run. Missed that. Was in it, and then we had the contract roll, so we had to give that one back. Sugar, nothing. Cocoa, nothing. Coffee, nothing. Cotton, nothing. Lumber, nothing. Bitcoin, we are long. Mean reversion, curvy long. Great heading into a weekend, right? Love that. Didn't fully get going with it, but we're long through Coinbase, so we can play it out. We don't if something happens there. Speaking of Bitcoin, um, the crypto momentum system that I run got long back in October, November of 2023. Bitcoin at about 35,000, right before the ETF and before everything happened. And so up to currently down at 83,000 right now, but we got up there. This only thing you're looking at here is a signal that the bull market in crypto is on. Nothing else. Okay. This is just saying the environment for crypto, everything I do in markets is all about being in the environment, being in the regimes, being in the area where the possibility of X to happen is always available. And that's where we are. That's where we are. So we should probably have another year of this. That could change tomorrow. We could get the exit signal, but that's what we're looking at. So how I'm trading it, I'm not in any alts right now. Only thing I'm in is Bitcoin. So my crypto accounts, just Bitcoin. And I've been adding down in here. I started, it was 70. I'm sorry. It would have been somewhere. Okay, here we are. Yeah. So 84, 81, got down to like 78,000, I think. This is on the futures, by the way. So not the same as spot. I'm just using that as an angle. So I've added 3 times. I don't think just 3 new buys. I did the same during the summer, down in this area. You can't see it, but similar sort of scenario after the big run up. It came down. I got it at about 53,000 during the 53,000 during the August move. And I started out getting long over in this area over here. So let's call it 35, 53, 80s are where I'm in on Bitcoin. Just waiting for the crypto momentum to return. And I'm patient because that's how the system's built. It's a momentum system, and momentum systems go from like really boring periods to really exciting periods. You have to wear down the exciting periods. Everybody was, Michael Saylor, MicroStrategy or strategy, and we're going to $1 million, all that sort of stuff, right about right here. And we've just gone down ever since. And it's been a couple of months. And there's like max hate. We take a look at things like the meme sector. We got our signal over here in December to get out of meme coins, and it is down, over 80% on, the average meme coin during that period of time. Okay, so basically, here's what I got going. This is my dashboard. This is our dashboard for the regimes. What everything's in. I have a trade in on NASDAQ. Silver, I'm currently short. Copper, I'm currently long. RBOB, I'm currently long. I'm looking for a long. That was supposed to be in soybean oil. There we go. And then I'm long Bitcoin. Everything else is mostly flat. We took our portfolio from, let's see, we are now up 5.4%. I believe that's higher now. 5.5% on the year. The macro discretionary portfolio, I believe, is over 10% on the year. The quant portfolio is the one I run, if you're a member of the collective. Compare that to the S&P 500, which is down about 5%, 4.5% on the year. So the discretionary portfolio, that would be up about 15% versus the benchmark. The quant portfolio is up about 10 versus the benchmark. And S&P is still negative on the year. So if you want to get in on those, you can join us in the collective. Again, I'm going to put the links to Curvy, Swing Beast, the crypto momentum system, everything you're going to need to trade along with what we're doing here, how my process is flowing. And I think that's what we got for the week. We had a bit of a rally here into the close of the day. Let's take a look. Yeah, bit of a rally here into the close. putting in a nice high on the week on S&P, or on the day on S&P. Solid week generally. I would say this is still a pretty bullish week on the markets. This is exactly what I want to be seeing. I want to see that the first order of business was that trend line was taken out. Let me move it because it's back adjusted now. This downward trend line that was just so obvious was taken out on a week ago, and then we've held it, follow through. So there's actually another trend line from the high, and we're seeing this one go to that. That has been the resistance that we're having. So we actually have another one. Trend lines aren't anything special. They just give me context. Okay. All of this is about context. What looks like could happen. If this happened, what would that mean based on? So if we broke out of this trend line thing after what we saw in the S&P 500 here, that's like multiple parts of a puzzle after this bottoming print down here. You see that happen, and then you go and you take a look at what we got here on the daily chart, and you see this trend line. If it closes outside that trend line, that's going to signal a lot of people they're going to come in and start buying, right? All the time when I do trend lines, I like to see a breakout, I like to see a retest, and then I like to see it. I want to see it come back in and just kind of like scare everybody, get everybody off like it has done. And here we are again with this one. Okay, that's it. Have a wonderful weekend, everybody. Check out the email that comes along with this. If you want to subscribe to the email, if you want to get the email version of this every week, macro-ops.com. I love you guys. Bye.